there could be, if at all, there could be some incentives for the savings that will perhaps go a long way in terms of building up the capability of the economy. That I believe will be very positive.
But the overall environment in India is very positive, and we would like the government to ensure that there is further impetus towards startups, and generative AI is becoming a very important technology advancement, has become a important area. So what can we do to indigenize it? Like, there's so much of opportunity in bringing it to the masses, particularly in India, where there are so many regional languages and people living in rural areas. How do you make it to their advantage is something that we should encourage in, and it will be very happy if the government could focus on that area as well.
I do think that they will have to look at the affordable housing segment in order to give more incentives for the affordable segment to get a higher income tax rebate. Because what has happened with the interest rates going up and the amount of standard deduction being the same, people are not able to get that benefit. And this is one, interest rate being higher and income tax deductions being leveled at for a long time, not being increased. I think the people of India would want that standard interest deduction should be increased in order to give the benefit to that. I think that should be the first demand from the Finance Minister of India.
Impetus on defense spending, infra spending should keep going because the top three budget outlays for 23 was defense, rail and metro and infrastructure.
First wish list with the government is always that at least the domestic players should have a level playing field. I think we are seeing unabated imports from China. In some form, it should be contained. There are also already DGTR recommendations of the CVTs and anti-dumping. I don't know how this can be addressed in the budget. Second is that India is short of stainless steel scrap, which is our key raw material. So the duties should be a zero duty import, which should be allowed on these scrap, because it anyway adds up to the circular economy from ESG front.
It's important that we give this relief to the affordable housing. And if that can be done, it will be great. It will spur the affordable housing more. Plus, like you said, the pricing. Now, the pricing has always been a challenge. Now, pricing is a component of land plus construction. We all know that. And looking at the developers' margins, all the listed companies work with single-digit PAT margins. So it's not that the margins are very high and then we are making a lot of money. It's not the fact. So there is, this is not something to do with budget, but GST is where some correction, if it happens, if we get the input credit or if something can be done on GST for affordable housing, that will be a big relief for the buyers.
Anything which helps drive the demand further up, whether it is the infrastructure projects or it also we can look at any other, the road infrastructure, that should continue. We should also be getting a lot of other economic activity because finally for us, if the freight movement that we measure in billion ton kilometers, if that is going to be steady, that is going to be strong. And that has a direct correlation with the GDP growth.
I think the ask from budget is to keep that focus on boosting public and private investment, because that's the only way you can have that strong compound annual GDP growth rate of 6.5% that we are expecting.
The most important thing to watch from my perspective is the case of the missing FDI. The narrative in a lot of the popular press has been India as a prime beneficiary of supply chain relocation. And critically, the core support for the Indian economy has really been government-driven CapEx. The central government has stepped up with a very significant CapEx program. However, it spent most of it. And if you look at the way the budget works out, federal CapEx was up 16% in the first half of the fiscal year. That implies it will only be up 1% as we look at the second half of the fiscal year. You've seen a very strong step up in state level CapEx, but that's off a very low base. And so the overall drivers of the Indian economy get very interesting as we look forward into the second half.
I don't really sense the government changing its supply side policy making approach. So I don't see that changing per se. So I really doubt there'll be too many surprises. Anyway, it's more of a vote of account. I'm not too hopeful on any sector specific, big changes right now. We'll have to wait for the next one. which is after elections.
Don't expect any big bang announcements, but clearly as an investor, I'd always want that. I don't think that tinkering with the LTCG should happen. I still think India needs a differential tax rates on long-term capital gains.
Dividend tax?
Sorry?
What about dividend tax?
Dividend tax, if that can be, because that's double taxation.
That's double tax.
You know, so obviously
And it's hurting a lot of investors.
that's right. I mean, and if you actually add up, then the effective tax rate goes really
Much higher.
much higher. And we've seen also several kind of people move out of the country, and there are reports that one of the reasons could be because of high tax rates on dividends. So I think if that gets plugged, I think that will be quite meaningful.
I would expect the capital expenditure growth to continue, especially when we are talking about railways, defense, roads. I think that thrust will, at least for FY25, will continue. I would expect some more extension or increase in amounts under schemes like PM Kisan, because there is rural stress. We are still talking about a K-shaped recovery. So that should continue. And I don't think the fact that it's a vote on account should make it not possible for the government to increase allocations, because it's an existing scheme. So you can always increase allocations to existing schemes. Some more tweaking of the income tax slabs for the middle class, so that consumption gets a little bit of a further boost. One more thing that I think they could announce, again it's an existing policy, is extension of the 15% tax rate for fresh investments, because that's, I think, lapsing the next few months. So that if you want to do PLI and make in India, that 15% tax break extension should happen.
I think there should be some kind of benefit given for long-term investors who come to the bond market, okay, through the mutual fund route. I think that parity is somewhere I think one would like to, because you've seen since then the flows into the mutual fund industry, into the fixed income space has kind of dried out. And it's very important if you're trying to build the bond market and liquidity. And that's an area where I think we would like to some kind of relook into it.
I think there is going to be a situation where you're going to have a little more rationalization in the taxation, because you're moving to a stable tax regime. Like I said, I think some government spending at the bottom of the pyramid is what probably looks like it's going to happen. But I think anything incremental is going to be only announced in the budget.